Good evening, Inner Circle. Inner Circle Unite. We are in January 2020, and this is our first webinar for 2020. Last week we did a field trip over to a house we just picked up over in Baldwin. And today, since it is a start of a new year, I have been talking extensively with my good friend Matt Seamer, who handles all of our accounting needs here at SSIC and Real Estate Rehab. And he is expanding his business, and we were talking about a couple different things. I'm like, hey, I got some folks that do real estate, and they might be in need of your services or have a couple questions. And we just got to talking. We're like, hey, let's have him on one of our webinars to talk taxes, everyone's favorite subject. This is going to be really super exciting, isn't it, Matt?
Absolutely.
All right. Full disclosure, I was busy today and I asked Lori to promote the webinar tonight, and she said that Matt is a CPA. Matt is not a CPA, and he is not a certified public accountant, but he can still do taxes. People can do taxes for other people. You don't need to have a CPA's license to be able to do that. But full disclosure, he's not a CPA. He is expanding his business to do advanced planning, tax planning strategies for individuals. And that's actually how we kind of got started talking about having him come on for tonight, because he's got a pretty cool business model to for the right individuals save money, and it's a pretty economical way to not only save on taxes but to hire his services. And maybe if we get some time, we can get to how that would work for the right individuals. But wanted to have him on. I talk about him a lot from time to time, and he is my saving grace when it comes to keeping all of our books in order and keeping everything paid, and keeping everything allocated, and just basically calming the chaos when it comes to paying bills and having everything go into QuickBooks the right way. And so I thank him every time I see him, and he knows that I appreciate him. But he's on today to talk about our questions when it comes to taxes. So Matt, you want to introduce yourself and fill in the gaps from what I've just said?
Yeah, sure. My name is Matt Seamer. I born and raised in St. Louis. I've been doing accounting for the last 15 years. I think this is my 16th year. I got my start in accounting for real estate investors. Actually, I had a friend who was an investor back in like 2004, 2005, fixing and flipping, rehabbing houses in South City when, it was a great time to be a real estate investor back then. And he actually had a crew on payroll, like 3 or 4 people, and so had a decent sized operation. And he asked me to come manage his office, paperwork, that kind of thing, which he was not fond of doing, which I came to learn is pretty much the case for every real estate investor ever, I think. And once I started going through his stuff, I figured out you're not making as much money as you think, and I don't think you can afford to keep me on your payroll full time. So I basically fired myself. But he referred me to a lot of investors over time, and I've just kind of grown from there. The majority of my clients to date are real estate investors, and I, been, seeing all kinds of different things, all kinds of crazy different deals, and accounted for them. Worked for a couple, done accounting for several different property management companies, which is also interesting to see. And yeah, just really like. I mean, I really like working with real estate investors because I don't know. I mean, just it tends to be more like, it's so much less corporate, which I really like. It's more personal. I find people to be more authentic and less. Yeah, just I like the personal connection as opposed to working with larger businesses that have 10, 20 plus employees, and it's just it's a much different atmosphere. So yeah, I've really enjoyed my time working with investors, and love to answer any questions or help however I can.
Sure. So, um, in years past, you just basically handle the books, money in, money out, allocate to what property the kitchen went into, um, property manage, accounting for property management, and briefly before we get into the tax stuff, like I know, like I do, oh, I don't know, basically two types of transaction. Well, several different types of transactions, but let's just say three transactions is what I do over and over and over. One is I buy something, I fix it up, and I sell it, and that is a lot of entries into the journal, right?
Sure.
Another one is I'll buy a property and I'll take title to it, and then I will wholesale it off. And another one is where I'll buy something, I won't take title to it, and I'll just make a wholesale fee, like an assignment fee, right? And those are the main transactions that I do. Now I've done other ones less frequently, where like owner finance deal or like a subject to deal, some of the more complicated ones, creative financing, and things like that. Um, I wouldn't. What's interesting is when it's like second nature to you, but if I take title to something and order insurance on it, and then I find a buyer the next day, and they close on it in 2 weeks, and then I give you both of those HUDs. I give you the HUD that I bought it, and then I give you the HUD that I sold it on. I wouldn't know, honest, and I'm not dumb. I just don't do it. I wouldn't know what to take off of those HUDs and put that into QuickBooks to be able to do that. Uh, I mean, we're not going to go line by line through a HUD or whatever, but honestly, like I, 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 I remember one of the first couple times you did that when you started working with me, and I'm like, that doesn't make any sense. Why do you do it that way? Like, just that's how it's done. Don't worry about it. But
Sure.
and every time I buy a property or sell it, the first question you ask me is, did you take title to it? If so, I need the HUD. If not, I just need the settlement statement when you sold it. And so, the mainstay transactions like that are pretty simple to do, but even still, like I barely know how to go in and look up a P&L or how much I have in the property inside of QuickBooks. But those are not complicated transactions to you at all, right?
Sure. No. No.
So, um, I, you know, I and I it's when do you hire someone on to do the work that you do, and how often do you need them to come in? And that's really just about how many transactions you're doing, and how much money that you're making, and how much you can do it yourself. Getting a chart of accounts set up and all that kind of stuff. I Yeah, I don't understand how you do it. You've showed me a couple times since then, and I'm just like, all right, as long as you're doing it right, I don't care. But you really are an integral part of a real, a small business team like that. The book, The E-Myth, right? The E-Myth is the entrepreneurial myth where you're in business for yourself, and freedom, and all this kind of stuff. And then when you get down to it, you're wearing all the hats. You're wearing the payroll hat, the accounting hat, the manager hat, the HR hat, the marketing hat, the sales hat, the planning hat, all those hats that you're wearing. You can't wear all those hats and do those things well, right?
Sure.
And man, it was just, I just looking back on me, it was just such a relief when that aspect of it was fixed. And so from the basic transactions to a very complicated transaction where there's owner financing and there's rents involved and there's a lease option or a subject to or something like that, that's also not very complicated to you. You know exactly how to allocate that. And I'm not reading into that, right?
No, no, yeah. I mean, I've seen. I guess at this point, uh, I'm sure it's in the thousands of you know those transactions over the years now
Mhm.
that I've dealt with. So that I mean that's yeah, I mean that's really pretty second nature to me at this point. I mean I really think more what I like to think I bring to the table is I mean I don't know. I guess everybody's different, right? I mean I think that what you guys do for a living is complicated or intimidating, and um, but to me the bookkeeping, the accounting aspect of it is pretty easy, straightforward. I mean, I think what's more important is like what comes after that, because I've worked with a lot of small business owners over the years where it's not so much. I mean, having the bookkeeping and accounting in order is important, but if all you're really doing that for is to get the tax return done at the end of the year. I mean that's important. You need to have it done, um, but it's you can get a lot more out of it than that. I mean, I like to think in that as a small business owner, it's all the buck stops here, right? I mean, it's all kind of on your shoulders, which also means that like if you aren't really making yourself aware of the financial picture and financial situation of your company, nobody else is. Um, so either you're doing that yourself or you have somebody on your team that's doing it. Um, but I just think that's so important for a small business owner because I think a lot of times, you have that dream of being an entrepreneur or being a real estate investor, and you get into it with, great intentions and great expectations, but you don't really have any kind of reality check of like, the feedback of the numbers, because the numbers don't lie. And I know they're not always exciting, and it's not always, as sexy as going out and getting the next deal or talking to the next potential seller buyer. Um, but I think it's so important to have numbers in front of you on a continuing basis, because it's like that feedback that allows you to understand how the business is performing, and like the more you get acquainted with those and wrap your head around them, I think the better you can, it's just kind of like an upward cycle where you can use those to make better decisions going forward, and then see how those decisions impacted or changed numbers over time, and then use it to make better decisions after that. And it just kind of builds on itself. But you don't really, it all starts with the bookkeeping aspect of it. But I really like having um, ongoing conversations with people that I work with, so that they can have, a lot of times they don't really have anybody else that they can talk to about, you know, what's the money situation. I mean, sometimes even the spouse, those can be difficult conversations, or maybe your significant other just doesn't know enough to be able to, help or give feedback. I, yeah, that's really where I'd like to take it with people, because I think it's once you have that in place, someone, and whether it's me, whether it's a CPA, whether it's a friend, business partner, you have to have somebody in your life that you can have those honest conversations with about how things are going financially, and have that kind of consistency with looking at those things and thinking about them over time. Uh, I think to keep your business on the right track and improving.
So that's really, really interesting because now that I look about it, every time you come in, we end up talking for like an hour about business. And the more I do that, I kind of want to ask you about your life and your business, but we end up always talking about my shit. You know? Um, so yeah, everyone's favorite subject is themselves. So that's why I love talking with you because we always talk about me. So, but I mean, we need to because you're in here for business. So
Sure.
I'm making jokes, but you know, I get this question a lot. Well, Nick, I need a really good bulldog CPA or someone who's really, really good with real estate transactions or with, real estate, because I don't want to pay a lot of taxes. I've never had, by the way, I've never had anyone say, Nick, I want to pay the most taxes ever. Who's a good CPA you could recommend? No one's ever said that.
Right.
But I think it's more important to have someone like you on your team for what you were just talking about, right? Not only just to have peace of mind to have your books in order so that tax time isn't a freaking train wreck like it was for me before you came along, but to have those honest conversations to say, hey, you're going to have to make some moves here um, because this is coming up, or have you thought about this, or hey, now that you've got this done, sweet, now we can do this, and do some forecasting and to do some actual business strategy stuff, right? And I think I could take the work that you've done to any CPA, and they're going to just plug in a couple numbers and say, okay, here's what your taxes are. Like you've done all the work, right? But to get to
Yeah.
that point,
Right.
it's not just the allocating and accounting for all the dollars in and dollars out. It is having that conversation of, hey, this property went really well. Do more of those. Well, duh. I kind of knew that, but I didn't realize how bad this one was, or that kind of stuff. And to talk about forecasting and things like that, that is invaluable. Now, um, the last major conversation we had, we did talk a lot about you, and that was that you are growing your business because you have recently kind of found an opportunity slash passion for doing some advanced tax planning stuff so that you can reduce people's tax bill at the end of the year. That some people, it's all maybe kind of common knowledge, but most people that you found just aren't taking advantage of those things. So to walk me through how you kind of wanted to kind of grow your business and what that's really looking like, and what might that impact for people listening here right now.
Yeah, sure. Um, well, I mean, over the years, it's been interesting. Like I've had everybody asks like, how can I, pay less in taxes, right? Um, and I've sat in on conversations with a client and their CPA or tax preparer where they've asked like, is there anything else I can do? Is there anything else I can do? And I mean, what I've found over the years is that like um, most people assume that their tax preparer is helping them reduce their taxes as much as possible, and it's really, I mean, in reality, it's really not the case that happens, uh, because somebody who's whether it's an individual or a firm, if their main line of business is preparing tax returns, I mean, then that's really what their focus is churning out tax returns. Now uh, they're going to do the best that they can to help you reduce your tax liability, but really where you get the most, I mean, first of all, I should say like there's no magic bullets when it comes to reducing taxes, other than if you're making significant amounts of money, then there are more strategies you can put in place. But for most people, really the best advice I could give in general is to do something what I call tax planning, which means if you're talking with your tax person in December or like April 14th, it's already too late. I mean, there's very little you can do at that point to reduce your taxes. I mean, it really comes down to tax planning, which means exactly that, which means taking steps or putting things in place. Like ideally, if you want to reduce your tax burden for 2020, you'd start putting some things in place now or early in the year so that you can take advantage of those things over the course of the year, as opposed to doing things at the last minute. So let me give you an example of that. I mean, one strategy that a lot of business people can take but don't is, I'm just throwing this out as an example. So if you don't have kids, it's it's not a loss, but a lot of business owners can employ their children, and not to dive into the details of that or get caught in the weeds, but depending on how old your kids are, like if you have teenagers, I mean, you could consider, rather than them getting a summer job, if there's paperwork they can do, if there's, light work that they can do at a property that you own. It just depends on everybody's individual situation is different. And that's part of why the planning is important, because you have to talk through the idea of, would this strategy make sense? Is it worth the effort that you'd have to put into, like, as I was saying before, there aren't any magic bullets in the sense that, hey, if we just check this one box, then I'm going to lower my tax bill by $5,000 or things like that. But there are things like this that, as I said, like with employing minor children, there are things like that you can do. They're going to take some effort and some forethought and some planning, but there can be a lot of advantages to doing that, both for your business and your family as a whole. So that being one example, what I've started doing with people is doing tax planning in the sense of, rather than being reactive, being more proactive in going through, going through basically like an interview type of process or discussion where we look at and talk about a lot of different areas of both your business and personal life. And, I ask, are you doing this? Are you doing that? What's the situation with this or with that? And seeing where some areas of opportunity are. And then talking about what you would have to do to put things in place to take advantage of the tax code in that way. And also weighing, does this make sense? So another example with that is retirement planning. I think small business owners in general are notoriously pretty bad about retirement planning, because it's easy to, if you're employed by a corporation, to just make 401k contributions. But I think for a lot of people, their business is their retirement plan. But it's not always the best. There are a lot of advantages to contributing to retirement plans. And so having a discussion about what your options are and what kind of what kind of sense it could potentially make to, just divert some of the income that you might reinvest into the business and put it into a retirement plan instead. And, what that would look like in terms of tax benefits, retirement benefits, that kind of thing. Yeah, so it's, I mean, as far as tax planning goes, it's not just a matter of saying, like, here's a list of 5 things you can do. It's really a matter of saying, like, here's a list of 5 things I think you can do. Let's talk about how you could potentially see this fitting into your life and what kind of obstacles there would be, what kind of questions do you have about putting it in place? Because, I mean, as with so many things in life, like if you just give somebody a list of ideas, that's great. But a lot of times, we're so busy that the ideas themselves just aren't enough. Like if you don't have help and support to work through how you'd implement those things, they're just gonna, die on the vine. So it's really a matter of saying here's a list of things that you could potentially do. Um, what obstacles do you see, with putting those in place, or what questions do you have? How can, what kind of action plan could we put together to, make those happen? And what would be the benefits or the changes in your uh, potential changes in your tax liability from doing all those things? So,
Well, it's like, yeah, everything's a great idea, but you still have to take action on it and make it happen, And that's it's interesting because I guess from what can I kind of get out of that is you've been doing the same thing over and over and over for the last 15 years. Not that you're growing tired of it, but you just kind of want to expand and offer more services to people. Um, and again, like I heard this not too long ago, but it actually had a pretty big impact on me. Um, for years, I always thought, oh, you got to be real passionate at real estate to do real estate, or you have to be passionate at um, salon work to be a stylist, or you have to be passionate about bookkeeping to be a bookkeeper. But just recently, I was turned on to the idea that passion's not the right thing that you need to be looking for. Like, as a kid, I'll find something that you really want to do in life and do that, and you'll find a way to make money. And I was turned on to the concept of no, look for opportunities, right? Look for opportunities. If you luck out and you're a musician and you are able to join a rock band that sold 20 million copies of something, yeah, you're passionate about music and you saw an opportunity to write certain songs and things like that to make a bunch of money. But it's more looking for opportunities versus being passionate at something. And the way I see you is you saw an opportunity that wasn't being met, which was a lot of your people don't do the things that could do to set up a better foundation or a financial life, and save money and save on taxes. And so you're kind of filling a need that you kind of saw. And so you're living that epitome of, hey, I see an opportunity here where I think I can help a lot of people out, versus being passionate about taxes. You see an opportunity to actually really help people. And that's ultimately, I think, what you're passionate about is helping other people.
well, yeah, I mean, I guess it really sunk in for me because I have one client in particular where, like, every year we would get on a conference call with his CPA towards the end of the year, and ask, you know, he'd ask basically the same questions every year. Although, I mean, some of them were phrased differently, but it's like, and he'd get some ideas out of the call, but, like, I mean, I just think a lot of people just haven't had the experience of having somebody, like, review in depth, or like, you don't even know what questions to ask, right? It's like, I feel like there's got to be a better way of doing things, or there's got to be something I can take advantage of, but I mean, it gets back to, like I was saying, a lot of tax people, it's just not, it's not a focus. It's not something. I mean, their focus is on doing tax returns. It's not on you know doing some kind of comprehensive review of somebody's business and personal life, looking at it and saying, here are some areas I think you could improve, some things you can do that can really make a big difference with your tax liability situation, and then coming up with a game plan to make that happen. It's not a focus, and I think even I had one person I was talking to about this recently say, like, even if you tell me there's nothing I can change, there's nothing better I can do, even that is helpful, because at least I know. At least I know I've done all I can, and I'm not being don't have this nagging feeling in the back of my mind of, like, I wonder if I'm losing all this money that wasting all this money paying taxes that I wouldn't have to if I just did this, and this differently.
That's a really good thought there. All right, so obviously this has been pretty broad strokes, nothing really too concrete. However, the concept is really, really strong, right? I mean, at the end of the day, we are small business people. We're buying and selling houses. We're renting houses out. We're in real estate. We're doing things. We have lots of transactions. We have lots of things going on. I think I was trying to say this. I'm not sure if I made the point, but I want to make sure that I make it. I think your position, your role within Nick's little company here is much more valuable than a CPA that I talk to once a year at tax time, right? I think your role is way more valuable than that. And now the fact that now you are taking over doing the taxes for me, which is awesome. It's just a natural transition. But to have that conversation with you as well, dude, you really are a super valuable part of someone's power team, specifically for real estate in a small business setting. Oh my gosh, man, like you really add a lot of value to people that are out there buying and selling houses, and I appreciate you being on the call. We do have a couple questions here. Can I ask how everyone generates their 1099s? So let's talk about who needs to get a 1099, what is a 1099, and why do we got to send it to them? Do we really have to do that?
Sure.
And I bet you wish you didn't have to send out 1099s.
Yeah, I wish. Yeah, it's more fun every year. I mean, so to answer the original question, can you read it to me again? What was it?
How does everyone generate their 1099s?
Yeah, I mean, I'm not quite sure how to. I mean, I guess.
Wait a minute, you've never even heard of a 1099?
Oh, what's a 1090? What's a 1040?
Oh man, so here I am talking about how great you are, and you don't even know what a 1099 is.
No, I'm trying to. Well, so I mean, there are a number of different ways you can approach it. I mean, I think a lot of people. It depends on how many you have to send out. A lot of people just go buy the forms at like Office Max, Office Depot, whatever it's called now, and sometimes you can buy, or often you can buy it in a package with like a piece of software that you can just enter in name, SSN, mailing address. It'll print out the forms through your printer, and then you just mail them out, and you're done. I mean, and I'd even, like, in years past, that's what I have had been doing for my clients. This year, however, I mean, just to give it a slightly different option, I've used here. Let me let me look it up real quick. I'm using a website called efilemyforms.com, which you might want to take a look at. Basically, it's a service where you can input or upload any 1099 information that you have to send out, and they will print and mail the forms for you. And the pricing is based on how many forms you have to send out. So if you're sending out 100, obviously it's going to be cheaper than if you're sending out 2. But this is my first year using the service, so I can't speak from experience on it yet, but I'm pretty optimistic about, I mean, they've been in business for nearly 20 years. And I just like, I mean, if you only have a couple to send out, it's probably not a hassle, but if there's a lot to send out, or if you'd rather just be more hands off, I think it's pretty nice to have somebody that you don't even have to go by the forums. You don't even have to know how to fill them out necessarily. You just have to give them the information that they need to print and mail the forms for you. And there are other services out there like this. This isn't the only one, but I mean, I think it's pretty handy to have. But to your other question, Nick, and not to dive down a rabbit hole with it, but in general, like, you need to send, as a small business owner, you should, so the IRS regulations are that you should send out a 1099 to any non-employee that you've paid more than $600 to in the previous calendar year. And those need to get paid to somebody that you paid either in their individual name, or if they are anybody that is a business but not a corporation. So like, obviously you're not going to 1099 Home Depot or Walmart or McDonald's, but if you, like, my company's name is Good Books Accounting Service. Now, just from, and this is, I say this because it's not, it's often misunderstood. I mean, people tend to think that 1099s only go to individuals, but they should also go to companies if that company is not a corporation. And really the only way to know that is to either send them a W-9 to find out, because a W-9 is an IRS form where you ask for their information, including asking whether they're a corporation. So it's either that, or you can pretty much assume any major corporation is or any major business is a corporation. As I said, like Home Depot, Lowe's, obviously you're not going to tax or 1099 Ameren UE or the city of St. Louis, things like that. But I wouldn't just assume that anybody that's operating in a business name is a corporation, because you don't really know until you W-9 them. And the incentive for doing that is basically, if you don't 1099 somebody and the IRS audits you, they can go through and look for anybody that you were supposed to 1099 but didn't, and then fine, interest, penalties, and all the fun, typical things the IRS does. Yeah.
Okay, so how do I go through, like, I bought lots of properties last year and paid lots of people and all that kind of stuff. How do you go through and in QuickBooks and easily find who do I need to send 1099 to? Oh, and by the way, as a general practice, what I try to do, whenever I pay someone, I ask for their W-9 right there, so that we have those, so we don't have to collect that information, along with a lien waiver or a partial lien waiver or any other supporting documentation. Like, I don't write checks unless I have that information. Devin collects that information, or the project manager collects that information, so that in large part we have a pretty good head start at the end of the year. But How do you go through, like when you go in, you're allocating stuff in QuickBooks throughout the year, are you denoting certain things that, hey, I'm going to need a 1099 for this, or do you just go through at the end of the year and say, hey, Nick, these are the lists? Because I think you just sent me the list today.
Right. Well, just to piggyback on what you said earlier there, I mean, always best to give somebody a W-9 before you pay them, because after that you lose all your leverage really, and you'd be surprised
Yep.
how many people won't call you back when you haven't talked to them in 6 months and you're asking for a social security number. But yeah, I mean, the best way is that you've kept good records throughout the year, preferably in something like QuickBooks. I mean, in QuickBooks, it's just a matter of I run the transaction list by vendor, and go through and see the amounts that each vendor was paid throughout the year, and anybody that's more than $600 and sounds like they, if it's somebody that was Nick Bauer, Matt Seamer, paid in their individual name, that's going to be a 1099. Any business that's, like I talked about before, not a major corporation or that I'm not sure about, hopefully we have a W-9 for them. I mean, obviously a lot of the contractors that you're working with, if they're a one-man show or a small crew, it's going to be good to get a W-9 from them, because in a lot of cases they will need to get 1099 at the end of the year. And just to be clear too, 1099s are supposed to be mailed postmarked by January 31st. So definitely earlier than your main tax filing deadline.
Cool. All right, so next question here. And by the way, guys, if you have questions, make sure that you put them in the either in the chat, or I'll unmute you, or you can unmute yourself and you can ask it in person. But Matt Flores, which by the way, welcome back, Matt. He went off the radar for about 6 months, and I was actually thinking about you the other day. I'm like, where the hell did Matt go? What are you doing, brother? And then he just emailed me today saying that he just picked up like 2 properties in the last 30 days, and so he's out there doing it. So good for you. But yeah, welcome back. Have you worked with clients on cost segregation studies for rental properties? How many properties do you need for this to make sense, and what is the cost?
I haven't done a cost segregation study for a property, and so just to be clear on what that is, the brief primer, because there are a couple different names for it as well. But when you buy a rental property, let's say you pay $100,000 for it, the IRS doesn't allow you. You have to depreciate that price over 27 and a half years typically. The IRS doesn't allow you to just take a $100,000 write-off all in the current year. You have to basically to keep it simple, divide that number by 27 and a half, and that is how much you get to write off for over the next 27 and a half years. However, you can do what's called cost segregation, where you, rather than just saying I paid $100,000 for this house, you split up, or you specify, every house has different elements to it, right? So within that house, you have things like appliances. And appliances, rather than writing those off over 27 and a half years, you're allowed to write those off over, I believe it's 5 years.
Personal property is 5 years.
Yeah. So there are different elements within the house that you can, assign a cost to, as opposed to just saying a lump sum and writing all of that off over 27 and a half. You can speed up the rate at which you write off certain amounts of the property.
And that's called bifurcating.
Bifurcating, cost segregation. Yeah, right. So no, I haven't done one of those. I haven't actually done one of the studies myself. I mean, I've but it is a good thing for landlords to do. When does it make sense? I guess it depends. So, I mean, if you have a commercial property, uh, if you have some commercial real estate, it's probably uh, and okay. So this is my disclaimer that I would not consider this official tax advice. This is more my off the cuff understanding of it. Definitely something that we'd need to talk about what your individual situation is, or research, or speak with your CPA about it in more depth. But I mean, in general, uh, my belief is if you have a commercial property, you're probably going to have to pay somebody to do a detailed cost segregation study. I think I'm not sure how much it would cost for a commercial property. I mean, probably most people here are going to be more interested in 1 to 4 families anyway. I think I've seen some pricing on that a couple months ago that it's like of around $400, something like that. Um, I can't remember the service who was offering that, and I'm not sure exactly what it looks like or how they perform that, um, how they perform that service. Uh, I mean, I guess you could, like, if you wanted to, you could try to do it yourself, basically. Now, I don't know that that's the best recommendation, but if nothing beats free or your own sweat equity. I mean, it's definitely something that would require some research, and if you were to go about it that way, uh, you'd want to be conservative in what you're putting down. Like, if you obviously you don't want to say, hey, I've got $10,000 of appliances in this single family home that's in South City. Um, you know, so as far as how many properties where it would make sense, I mean, like, it depends on what it costs, right? Cost benefit. I mean, it could make sense for just one property, especially if it's a expensive property, commercial real estate, or 4 family, something where you think you have a significant amount of cost segregation that you can do with it. Um, but something to keep in mind with that too. One other thought is that you're really not. It's not a tax strategy in the sense that you're not saving any additional money in taxes. You're just speeding up the rate at which you can deduct those expenses for your property. So, like, over the again, if you have $100,000 house, rather than writing off all of that amount over 27.5 years, you're just taking a certain portion of it and writing it off more quickly. But it doesn't expand the pie. It doesn't make your deduction bigger over the long term. It just makes you able to get it sooner.
Right. So land can't be depreciated.
Right.
That's why assessed values on land are always much lower on the county's websites and things like that. Um, buildings can, or improvements, or the actual building can be depreciated over 27.5 years. Personal property is over 5 years. And I believe land improvements are over 20 years. So like if you put a sidewalk in or something like that. And so I think it makes sense to take a look at that for any size portfolio. But again, if someone's going to charge you $1,000 to do it, and you're not going to save, and you only have one property, it might not be the best. It might not be the best allocation of funds. If you've got 15 or 20 properties, it might be worth it to go down that rabbit hole and to do that. And I guess I didn't realize that you needed to do the whole. I thought it was, my understanding of it was It's just how you report it on your taxes, and a CPA could do that. I didn't realize there was necessarily an extra cost for it. So maybe I was understanding
I
that
think it,
incorrectly.
I think it depends on how audit proof you want to make
Hmm.
your numbers. I mean, I have seen people that and I don't know the exact methods that they use, but people that I think really didn't conduct any kind of study. They just said like, well, let's say that 5% of the purchase price was, or I don't know, 2% of the purchase price was appliances, 5% was land, this percent was, just doing it that way. Which I think if you're going to do cost segregation for um, for a rental that isn't worth a lot of money, I mean, you're not going to want to pay somebody $400 or $500 to do a study for a $200,000 house. It just doesn't make sense. If you want to speed it up, then I mean, I think you could just work with your tax preparer to come up with like a very basic way of doing it.
Right.
And, I'm sure it'll be challenged under audit, but as long as you're not being overly aggressive with it, I don't think, it's not like you're going to go to jail for like overestimating the cost of your appliances by $100 or two. I think the studies are really more for large properties, commercial real estate, where it's going to be more important to get where one is going to be more difficult to get those numbers, and two, it's because it's kind of a higher leverage game, it's going to be more important to have backing,
Right.
proof that holds up under audit.
So we had a real estate investor in the inner circle a while ago who was came from the corporate world. He was a CFO, and he did his own taxes. He just liked doing them. You numbers guys are just wired so differently than I am. But he liked doing it, and that's what he did is he just took the assessed value of the land and used that, because how could you, if it goes through an
Right.
audit, how can you argue with that, right?
Right.
And just took the cost of the appliances, and just did that bifurcating himself. Um, and that's how I understood it to be. But for those larger properties, I think that's where the cost segregation, paying for a study, does make sense. So, um, very cool. Paul writes, is an LLC considered a corporation?
It depends. It's called a limited liability corporation, of course, but for IRS purposes, it's not considered a corporation unless, by default, it is not considered a corporation. I'm sure you've heard the term flow through entity, because that business just gets reported entirely on your personal return on a Schedule C. It's not considered a corporation unless they elect to be taxed as a corporation, where you have to file a specific form with the IRS to be, to elect to be taxed as an S or a C corporation. And so you're really not going to know if you just read, if you just have Super Plumber LLC, you're not going to know whether they're a corporation or not unless you ask them.
Okay.
Unfortunately.
Um, Lisa Cox writes, Tammy, I use Buildium property management software, and they will issue the 1099. And Lisa's been touting Buildium property management software for a while. She absolutely loves it. So I've yet to look at it. I need to take a look at it. But they will issue the 1099 for you if you need to. I missed one from Matt. What are some of the common tax saving strategies that real estate investors miss?
I think what Matt already brought up with cost segregation is definitely one. And obviously for somebody that's just rehabbing or flipping, it's not going to be applicable. I mean, you're not going to depreciate those anyway. But for a landlord, I mean, cost segregation, bifurcation, I mean, that's definitely good to do. And like well, we just talked about it, but I think it makes sense to at least do it in some kind of rudimentary way. As long as you're not overly aggressive with it. I mean, in my opinion, I don't think you need to pay to have a study done for it. And that's a good way to, as we also talked about, not save more in taxes, but at least save more in taxes today as opposed to down the road. Um, let's see, other strategies. I mean, I hate to be going back to what I was talking about earlier, and retirement plans. And I know that's when you're a real estate investor or an entrepreneur in general. Like I know a lot of times you want to put every last dime into the business. But I mean, retirement plans as well as health savings accounts. You know, I know it takes some discipline to divert some of that money away from the business and to put into those places. But I mean, I just think that's a really big thing that people aren't taking advantage of, especially especially being in real estate where you can open up self-directed plans where you can use those to reinvest back into the business, or at least, well, I shouldn't say reinvest, but at least invest in real estate in some capacity with that money still. So it's not like you're just sending it into a black hole. Um, yeah, I mean, I think that's something everybody should be doing, but I I say that knowing that it's difficult too. I mean, I have a hard time, having the discipline of, I want to put money back into my own business as well, but um, I really think it's, you got to balance the short term with the long term and at least put some of that money aside because it's going to benefit you in the short term with tax deductions and in the long term with, you know, having retirement money there.
Cool. Lisa, Paul says, Lisa, I'm looking into this. Can you do a short demo for us someday? We need to talk. So yeah, Lisa might have to do a little presentation on that software sometime. See for property management's sake. So on Buildium property management software. So yeah, maybe we can get that on a webinar soon. Lisa writes, we got a couple more questions. If I purchased a property in a solo 401k and all the expenses and income either come from or go back to the solo 401k, which has its own EIN number, is it a non-taxable event basically if no distributions was made?
Yeah. Yeah, if everything is contained within, whether it's a solo 401k or an IRA, as long as as long as all the activity happened within that retirement account, then yes.
Sweet. Well, this was if you guys have any other questions, we got maybe time for one more. Type it in, but this has been a welcomed different conversation in regards to what we normally talk about on these webinars. And I think it's important that we spend time on this because, we do have income and we do want to do smart things with it. And, we talked about a lot of pretty high level stuff and maybe we put some broad strokes on some things, but it's really nice to have a conversation like this. A smart strategy session kind of thing. And I think it's worth it if you guys are interested in talking with Matt further, maybe for your own personal business. How do they get in touch with you, Matt? What's your website?
Here, I'll type it in the chat here. second.
Goodbooksaccountingservice.com.
Yep.
Goodbooksaccountingservice.com.
And that's my cell number as well. So
cool. So 441-9138. I think this has been it's been a really good conversation. Thanks, Matt, for joining us. And I hope you guys got a couple things out of this, got some ideas. You're kind of like a one-stop shop now where you do the accounting, tax planning, and then obviously tax preparation. So I look forward to helping you get you some new clients actually from SSIC to take advantage of that. I think it's an awesome service for the right person, and thanks for being on the call, man. I appreciate it.
Well, thanks for having me. Absolutely.
All right, guys. Thanks for joining us for the first webinar of 2020. I think we did a good job of talking about something that we normally don't talk about. And I welcome the conversation. So questions, comments, or concerns, please just let us know. We're here to help. I know there's a lot of activity out there. People are buying, people are selling, people are adding rentals and all that kind of stuff. If you have questions, we're an email or a text away. And Matt, thanks again for being on the call here tonight. Folks, we'll see you at the top or from the top. Talk to you soon.